Hey everybody, welcome to another episode of Real Estate IQ, where we take you behind the scenes on the South Florida real estate market. Today we have a very special show with a very special guest, my old friend Lennon Lee. Lennon is the founder and principal of BLD Capital, a private equity firm that focuses on commercial multifamily real estate investing across the United States. Lennon, welcome to our show.
Thank you, man. Thank you for having me.
I've had the pleasure of knowing Lennon for many, many years and following his progress. And today we're gonna be talking about multifamily investing, something that Lennon and his partners have been doing for a couple of years. Lennon, explain to us a little bit about what commercial multifamily investing is and why is it attractive as a real estate investment class?
Sure, definitely. I think the first thing that we have to do is define what commercial multifamily is. Multifamily real estate, it's any real estate that's 2 units or more. So a duplex, triplex, fourplex, an apartment complex, it's a multifamily real estate. Commercial multifamily, it's any multifamily real estate that's 5 units or more. The reason it's commercial multifamily, it's because the way the banks value the property and the actual, not only the banks, but the way the properties are valued versus you would say like a house or a residential real estate. So that's basically the difference and the definition.
So essentially with commercial multifamily, underwriting guidelines and principles are different.
Definitely.
And what is it that attracted you to commercial multifamily investments?
Definitely the way they're valued, because with commercial real estate in general, not only commercial multifamily, but actually every type of commercial real estate, it's valued on its income. So you have something called NOI, or net operating income, which is one of the metrics that you use to actually calculate the value of these properties. Also, multifamily and apartment complex and that type of properties is something that I understand. I live in an apartment complex, so it's a little bit easier to understand for me initially, and then for our investors as well.
Walk me through the thought process as you're looking at a commercial multifamily investment. What are you looking for initially? The income, the costs, the age of the apartment complex. What are some of the main factors that you focus on with your partners when deciding to evaluate a property?
Sure, that's a great question, because that's something that you want to have very, very clear when you're looking for properties, and then even for brokers to take you seriously when you're actually sourcing deals and all of that. So the way we look at deals is we focus on stabilized multifamily real estate, which is properties that are 90% occupied or more. They have to be 100 units or more. Sweet spot's going to be 100 to 200 units. They have to have a value add component. So what that means is that they have to be properties that you can come in and improve that NOI, net operating income, in order to force the appreciation of these assets. So you have cash flowing assets, 100 units or more, with some value add component to it. And then we target different markets.
So when you say you need to improve the net operating income and force the appreciation, what exactly are we talking about? Are we talking about increasing its revenue, decreasing its cost so that the spread is higher? How do you do that?
I'm glad you asked that question, because that's what we call the holy grail of commercial real estate investing, specifically in multifamily. It's the forced appreciation. The way you force the appreciation, and you just don't sit on the sidelines and wait and hope that the property is gonna increase in value. You actually take action to force the value of the property to increase, and you do that by increasing income or decreasing expenses, which actually translates into increasing NOI.
Right.
The NOI, it's your income minus your operating expenses. You have that number, so that's the number that you want to increase. So that's the beauty of it, and that's one of the reasons that we are in love with what we do, because we can come in and really make a difference in these apartment communities and make some money for ourselves and our investors along the way.
Let's talk a little bit about the structure. Apartment complexes of 100 to 200 apartments probably takes a lot of money. Yes. How do you come up with all those investors? Do you have to find all the money for the apartment complex? Do you get a loan for it? And how do the investors participate?
All of the above. So every deal that we do, yes, we're talking about $10 million deals, $30 million, $40 million deals. So we finance through the bank 70% of the deals normally. We've done up to 80%, but normally we're around 70. And then the other 30%, which is the equity, we raise it from private investors. So we raise capital or pool resources. That's the way we like to see it, because it's not only the capital but the resources to bring together all of these people and all this team to actually tackle these big deals that no one of individual would be able to tackle on their own.
Right.
So that's kind of the model that we use.
Now, can just anybody come into one of these transactions? Do you need to have a special investor designation or any kind of certification, or can anyone who has money saved get in on the action with a group like yours?
Yes and no. There are certain qualifications. We work with accredited and sophisticated investors. Accredited investors are any individual that has a net worth of $1 million or more, not including their primary residence, or they have income of $200,000 or $300,000 if they're married. They've done so for the past couple of years, and they have the expectation to earn the same amount for the next few years. So that's what an accredited investor is. But we also do sophisticated investors that come into our deals. And basically a sophisticated investor is someone that doesn't meet the criteria of an accredited investor, but they do have the financial savviness of an accredited investor. So they've done investments in the past, they've participated in real estate investments of some sort, or they've even invested on some limited partnerships or private equity deals. They don't have to be real estate, but that's what makes a sophisticated investor.
So you probably do a lot of work to prospect and find the right property to get the loan from the bank. How does BLD Capital play a role in these transactions? What's the structure of the investment?
BLD Capital actually has a particular focus within this whole scope of the transactions, which is raising capital. Okay, so we work directly with investors. We educate our investors and people in general, so they can understand the asset, the benefits, and all of that. And we raise the equity from them and bring them into our deals. We work both as an operator, like we did on our last deal that we closed in Jacksonville recently, and we also partner up with bigger operators or operators that are not in Florida but in Texas or across the country. We have partnership with different operators with whom we partner up. We bring the equity, they find the deals, and we make the deal happen as well.
Why don't you give us an example of one of your recent deals? I know you've done some investing in Texas and in the north of Florida. Why don't you give us a little bit of a breakdown of how those deals work?
We can talk about the last deal, which is the one that I have fresher in my mind. 138 units, 1974 construction, and in a very, very good location. So this is what we call a C-class asset. Definitely workforce housing. That's what we focus on, the blue-collar tenant. And the business plan, if you will, on that property is to basically reposition the property from a C-class to a B-class property. That basically means that we're bringing the property to a level that's more in line with what the area around it is. So we're going to do renovations. We're going to spend around $8,000 per unit to bring the property to life. Landscaping, tree trimming, amenities, and a whole bunch of stuff that's gonna bring value to the property and bring up that NOI that we talked about, which is the way that we actually force that appreciation.
Those investments will allow you to increase the rents.
Yes, we increase the NOI. You increase it by increasing rent or decreasing your expenses. So ideal investments are one that you can come in, increase rent, but then you also have operational deficiencies, like maybe it's a property management company that's not performing that well. You can come in, bring your property management team, and tighten up the operations, decrease expenses, and that also comes to your bottom line in the form of NOI increase, and that translates into more value to the property.
So one of the reasons this is such a special show is because it's our first ever two-part show.
Yes.
In the next part, we are going to discuss syndication, real estate investment syndication, and how Lennon and his group puts together these investments from different investors to get these transactions done. So stay tuned for part 2 of our interview with Lennon Lee.